Even though being an investor in 2023 may seem difficult, it is absolutely possible with the appropriate plan and commitment. Building a portfolio of assets that will enable you to make a return on your investment is a prerequisite for becoming an investor. Research, market analysis, and risk management will all be required. Additionally, you'll need to create a long-term investing strategy and be ready to devote time and resources to building your portfolio. With the right guidance and resources, you can become an investor in 2023 and start reaping the rewards of your efforts. Before starting, don't forget to like and subscribe to the Financial Tech channel for more future updates. Let's begin, then. Develop a comprehensive investment strategy. A thorough examination of the current financial market circumstances, as well as the investor's personal financial objectives and risk tolerance, should be included in a complete investment plan. An evaluation of both short-term and long-term investment objectives should be a part of this plan. Investors should start evaluating the many investing options after those objectives have been established. Understanding the various asset classes such as stocks, bonds, mutual funds, ETFs, and commodities falls under this category. The many forms of investment vehicles, including individual stocks, mutual funds, and ETFs, should also be reviewed by investors. Before selecting a choice, it is critical to comprehend the possible risks and benefits of each sort of investment. Investors should also think about diversifying their holdings and keeping a balanced portfolio. To minimize risk and increase returns, this entails distributing assets across several asset types. A portfolio's potential exposure to inflation as well as the tax consequences of each investment vehicle should be taken into account. Investors should also take into account the need of periodic portfolio evaluations and modifications. This might include making modifications to benefit from shifting market circumstances or rebalancing the portfolio to maintain sufficient diversity. Investors may stay on track to achieve their financial objectives with regular evaluations. Open a brokerage account and begin trading. For people who are brand new to the stock market, opening a brokerage account and starting to trade might be a difficult job. However, it may be a satisfying and successful endeavor if you have a fundamental grasp of the procedure. You must first choose a broker and set up a brokerage account. The majority of brokers provide a range of accounts with various features, pricing, and service levels. Find the broker that is best for you and your requirements by doing your homework and reading reviews. You may start trading after selecting a broker and creating an account. Learn the terms used on the stock market so you can trade before you start. A trading strategy that details how you will manage your money, the kinds of investments you want to make, and how you will evaluate risk should also be developed. You may start buying and selling stocks, bonds, and exchange-traded funds if you are familiar with the stock market and have a trading plan in place. Make sure to do your homework and take into account variables like the market environment, the company's financial stability, and the possible risk while choosing investments. As you acquire knowledge and assurance, you may start to diversify your holdings and investigate more intricate tactics. Consider the advantages and dangers of your investments before making any choices, and get advice from a financial expert if required. Last but not least, keep in mind that stock market investment is a long-term endeavor. Be patient and give yourself plenty of time to get knowledgeable about the industry. You may succeed as an investor if you put in the effort and practice good discipline. Utilize tax-advantaged accounts such as a health savings account, HSA. A health savings account, HSA, is a savings account with tax advantages that is used to cover medical costs. Because it is financed with pre-tax dollars, withdrawals for medical expenditures are tax-free, and any leftover funds are carried over from year to year. Due to their potential tax benefits, HSAs are a fantastic method to save for future medical costs. A number of medical costs, such as doctor visits, prescription medications, and even dental and eye care, may be covered by the funds in an HSA. There are no limitations on how the money may be spent, provided that it is done so for legitimate medical costs. Another advantage of HSAs is that funds may carry over from year to year, eliminating the risk of losing any savings. In addition to offering favorable tax treatment, HSAs are excellent for budgeting. The funds may be utilized to reduce the cost of medical costs and make them more manageable since they are pre-tax. Those who are self-employed or have high deductible health plans may find this to be very advantageous. All things considered, HSAs are a terrific method to save money aside for future medical costs while benefiting from possible tax savings. They are adaptable, simple to use, and may make sure that medical costs are more easily borne. Attend investment seminars and webinars. The world of investing may be better understood by participating in investment seminars and webinars. Attending seminars and webinars gives you the chance to hear from seasoned investors and financial experts who can provide insightful commentary on a range of investing-related issues. The fundamentals of investing, including how to choose investments, the many kinds of investments accessible, and the risks and benefits connected to each form of investment, may be better understood by attendance of these seminars and webinars. Additionally, they may be a great resource for advice on portfolio management techniques and for spotting prospective investment possibilities and dangers. The ability to network with other investors and financial experts working in the same industry may be facilitated by attending seminars and webinars. Attendees may get insight into the most recent trends and advancements in the investing industry, as well as useful connections for potential future ventures. Additionally, keeping up with the most recent market news and happenings may help investors remain informed and make smarter investing choices. You may learn the fundamentals of investing and keep up with the latest trends and developments in the financial sector by participating in investment seminars and webinars. Investors may learn more about the many investing options, as well as the risks and benefits that come with each kind by attending these events. Attending conferences and webinars may also expand your network of connections and provide you helpful tips on how to manage your money. Investors who attend seminars and webinars have a better chance of succeeding in the realm of investing and making better judgments. Start putting together your plan now if you want to start investing in 2023. Learn the fundamentals of investing, including how to comprehend financial markets, spot investment opportunities, and manage portfolios. After that, research various financial instruments such as stocks, bonds, mutual funds, and ETFs. Create a budget, set savings objectives, and make sure you have enough cash on hand to invest in order to increase your money. Finally, to assist you in navigating the investing world, do your homework and choose a trustworthy broker and financial counselor. You may start investing in 2023 if you put in the necessary work and get the correct advice. This is it for today's video. What do you think of our video? Let us know in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.